Good evening, traders. This is Christian from Trading Group, and this is your end of day market recap. We'll also talk a little bit about the week recap or weekend review. Before I do that, risk disclaimer in front of you. Everything that we're going through is for information purposes only. Please read the full risk disclaimer right there. Been doing a lot of these live streams lately. Typically, when the market's a bit volatile or when there's something really big going on, I tend to do that. I did a pre-market stream this morning talking about the jobs report and a little bit about what that meant. Talked about some of the macro moves and stocks to watch. So I hope that these live streams help a little bit. I will continue to do some of them as we progress through next week. I did a lot of videos this week. This midday on YouTube, I did a video too about like how I was attacking today a little bit, where I thought that there was some buying opportunities that potentially wanted to go after today. And I'm going to talk a little bit about that in this video. I'm also going to talk a little bit about just what's going on right now in the market. Clearly, there's a lot of red on the screen today, and the first of the month living up to the hype. Jeffrey Hirsch is a great person to follow. He's Stock Trader Almanac. Throughout the year, he's a great person to kind of give a sense of seasonality and some trends that happen every year in the market. I do believe in that. It's one of the factors, one of the many factors that I tend to look at. It doesn't influence, all my decisions, but it's good to know. I was talking about this earlier, regarding the market and trading equities. There's a ton of uncertainties out there. Like, we don't know what the market's going to do on a day-to-day basis. We don't know what the market's going to do a month from now or a year from now. But if we can find a couple of these hints where we know that the seasonality is weak in August, and also there's a few months as we get into the fall that are weak, and then we know in the beginning, for example, the beginning of the year gets strong again in terms of seasonality. Those things really help. And it is all about probabilities. Like, nothing is ever 100%, but if you can kind of skew some of these things, it helps. And I think one of the things that he said was that the first 9 days of August are the weakest. So so here's a positive. We're through one of those days. Being a little bit sarcastic there. Probably another positive too that you weren't thinking about is, I've heard a lot of people talk about, geez, we haven't had a 1% down day in the S&P in however many months. Some folks like to count these things. Once I start seeing that, it's usually a little bit of a self-fulfilling prophecy. We eventually do have a down 1% day, and we got it today. So there's your silver lining, is that you won't see all these people on social media talk about, oh my God, this is the last, we haven't had a 1% day down and a down day in 2 months or whatever it is. So that kind of resets the clock there. Talking about today's performance, a couple things that really stood out to me in the macro sphere is that the jobs report was weaker than expected. The dollar, which was up 6 days in a row, broke that streak and broke it big to the downside. And sorry, I'm listening to Bloomberg squawk. But that's a big failure for the dollar that was trying to break through its value area for the year. Bonds made a big move today. TLT was up 1%. It helped the home builders, which really outperformed today. ITB was up 2.7%. So a rotation into, so again, very like counterintuitive a little bit, because you're like, oh, I hear that the economy is like weakening. You hear jobs report is weak. And why are home builders strong? Well, it's straight because of the move in interest rates. Also, so I'm going to move away from this screen. I can't flip flop in this format, so I'm going to move away from this. But I just wanted to note what we've got so far, performance over the last 5 days. You've got IWM, which really led down this week, down 4%. Both SPY and the Qs were down 2%. Your higher growth stocks really got hit hard this week. The ARK Innovation ETF was down 7% this week. The IBD 50 was down, roughly in line with SPY and Qs, down a little bit more, down 2.4%. Value actually underperformed this week, down 2.9%. And small cap value got hit hard. down 5% for the week. So that's a big week. What I was going to turn to next is what I found interesting with Fed Fund futures. So let me stop the screen and I'm going to share the screen again. Window, let's do this. Trying to get faster at this as I go along. But here we go. Here's Fed Fund futures, right? So this tells us what the market is pricing in, what it thinks in terms of what the possibility of a cut or hike. And this was coming into today. It got dialed down once we had the Fed meeting with Powell. I think it was 65. Just remember, going back from memory, I think Tuesday there was a 65% chance that and this is what the market was pricing in for the September Fed meeting, 65% chance of a cut. Once Powell spoke, that probability dropped significantly, so much so that this morning it was down to about a 43% chance of a cut. That's now up to 90%, and it looks like the Fed, has definitely ammo to say why they can cut interest rates. Now, I've been talking about this several times. I'll keep it very short, but my opinion is they definitely need to be cutting interest rates here. Why? Because not because of weak economic data, but just the overall level of interest rates. This is a very high rate, 4.5%. Every time that this rate stays up here for a long amount of time, and I'll just bring up this one screen for you so that you can kind of make a judgment for yourself, and hopefully this helps. I don't have this matched up with recessions, but you go back to the year 2000, they held interest rates up here, and what do they have to do? They had to cut fast. Why? Because the economy dropped into a recession. Same thing in 2005 and 2006. They kept it up here for too long, and we had we had the Great Recession. Now, of course, there's other factors at play here too, but certainly the Fed did not help, and they didn't look into the future and say, oh my God, we have rates up here way too high. So for me, and again, this kind of draws a little bit on my experience, but from when I started my career and when I saw interest rates stay up here, I've just seen the economy come crashing down. And it's very I guess they think that they can kind of control these things, but once the economy starts to weaken, it's already in motion of weakening. So in any event, I'll move on from here. But you could discuss this or think about this yourself. But every time I've seen this stay up here for this long, it causes a recession. Why they don't move it down to more of a normal rate of, say, 2%, I don't know. I'm not saying it has to go all the way down to 1 or 0, but geez, at least keep it around 2 or 3% so it's not tightening and impacting the consumer so much, because it is. And I think if you go to take out a loan of any type of, whether it's more of a short-term loan, especially because this is the short-term rate, right? You're feeling that as a consumer. Okay, let me get away from that, but I think it's important to review because these things affect, and that's why if I'm going over the probability, I think it makes sense to have a sense of how this has happened, for what has happened over time when you keep interest rates this high for this long. SPY. So a couple things. I'm going to quote, I've been quoting him all day long on this. I've said it a couple times in some of my videos, but I really like what Brian Shannon says about the 5-day moving average. I use the 5-day moving average, and I've used it over the years in my trading. But what he says is that the market is innocent until proven guilty when price is above the 5-day moving average, right? That's basically the wind is at the market's back, as well as when there's strong breath, in my opinion. When you break the 5-period moving average, right, he says that the market is guilty until proven innocent. I agree with that 100%. That's why I'm quoting it, because you lose the momentum. And especially after we've been above here, I talked about in yesterday's video that IWM was above the 20-day moving average since April, and it broke yesterday. And clearly now it's beginning has accelerated to the downside. Got a nice hammer bar in there for today, but this IWM is a mess. It broke back into the value area. I do not want to try a trade in IWM. Why? Because it's too difficult. Anything that's too difficult, I stay away from. This is too difficult for me. I'd rather go to things that are a little bit easier to deal with. So SPY broke the 20-day moving average. First time since April. That's a change in trend. Can it recover and move back up? Of course it is. But I go to what we know right now. That's not a good thing to see a trend that's been honored for the last 4 or 5 months be broken. And that's the same thing with the Qs. First time really below this 20-day moving average since all the way in April. Now, I do not think that this is the death to the bull market. And certainly, we're talking about short-term trends here. We're talking about the 5 and the 20-day moving average. Price is still above the 50, but it's falling. And you have to kind of watch to see where this lands. What helps me a lot is when I use the 1 hour value area, and I'll do this both for the Qs and SPY. And you could draw a trend line in here. Now, note, we did not break. Let me go back to this chart for just a second here because I didn't even talk about the new August value areas. So we've drifted in here, right? And we do have some support here. So that's right around 551.53. So that's another level that I think is very important, right? That's based on volume at price and important. By the way, take a look at, I want to just point out one thing here too. I hear this from time to time on the Twitter sphere, right? And social media. I hear, geez, well, the market's going up, but it's going up on low volume, right? That's what the market does, especially especially the big index ETFs. The market, I would say 99%, maybe that's too aggressive, maybe 95% of the time, right? And turns, I guess, are a little bit different. But when the market is grinding up like this, it's always going to do it on low volume, right? It is not going to go on high volume. It just doesn't happen. Why is that? High volume happens with volatility. Take a look at the last couple days. See the change in tone? That's when you see high volume. It's when volatility picks up, not when we're going up. So if you hear one of these people on Twitter or whatever, wherever, say, "Oh, I don't like this rally. It's going up on low volume," please ask them when they've ever have seen a high volume rally. It does not occur, guys. And I know it's a little bit counterintuitive, but you need to learn these things because there's a bunch of folks who will go around saying these things and they have no data to back it up when they say, "Oh my God, well, I'm not comfortable with this rally because it's on low volume." That's how it works. And the reason why is because when institutions accumulate, right, they do it in little bites and pieces, right? And when they're out of a trade, when they want to get out of something, they usually are all out, right? They pick up and they say, "Hey, I'm selling this, I'm selling this, I'm selling that." That's how it works, right? It doesn't, people don't go crazy and start anyway. So I'll move on from this. So that's the support that I'm watching here in the Qs. Also, just from a trend perspective, what helps is to watch this 1 hour value area, or you could also do this on a 5 minute chart. Notice how I've got like some type of a trend line drawn in here. It's not perfect. All it's doing is telling me that we've been going down since, yesterday morning, right? And price needs to reverse out of this trend too, right? So if you're looking for a bottom, right, number one, I would watch what we do in here, but it's not there yet. We're not above the trend line. And when we look at SPY, it's kind of the same thing. Now, again, we kind of stopped going down here a little bit, but I don't think that we've changed this trend, right? And the SPY chart, I would also watch the bottom of the value area for the month. Remember, what does this mean when price is around here? So first of all, if price is inside the value area for the month, that means range bound sideways. If we're above, we're breaking out, the market's strong. If we're below, we're downtrending and the market is soft. Right now, we're in value, and clearly we violated some of these short-term moving averages, but we're not in a breakdown yet either. All right, but clearly distribution going on. All right, what did I want to go to next? So so my game plan is, right, if I wanted to get into names, right, I don't go and try to buy names just because they're showing a little bit of relative strength for the day, because it could be things like the defensives are acting a little bit better for the day. What I tend to look for is names that have had strong earnings that are dipping a little bit strong earnings. And I talked about this name yesterday in my yesterday video. I spent some time talking about it. But look at the move in HWM. They had stellar earnings. They had great, not only good earnings, but they also had strong guidance. So I'm more apt to play something that is dipping, that has done this, because I view that the dips will be shallow and institutions will want to go out and buy those. Now, I would encourage you over this weekend, or in case you didn't do it today, go and look to see which names barely dipped today, or when they dipped, they got bought aggressively. In my opinion, and again, I'm not giving any advice here, but that's exactly what I would be looking for. I wouldn't be looking for trying to buy the names that are going down the most. That's called relative weakness, right? And this is a name, for example, and I'm not saying I'm not going to give you any opinion about when this name turns around, but this is not something that, like, over the last 3 months, this is easy stuff, guys. If you've been trading for a while, as soon as it breaks trend, you get out of the way, right? Because the institutions are no longer supporting it. So if you thought that this was a good buy, or this was a good buy, or this was a good buy, or this was a good buy, you're following the wrong people, right? Downtrends are not something that you want to be going after stock. And of course, at some point, maybe this gets supported. There's a VPOC that's taken out. There's one down here. But if you're looking to buy something like this, let me ask you a question. Where are you looking to sell it? Right? Are you looking for just like a quick 2% pop? Right? This is, as I mentioned with the IWM chart, right? That's a difficult chart to analyze. You think that this is a good buying opportunity? Crazy. Absolutely crazy. Institutions have been selling this, right? They're not buying this. So let's go to some stocks that I thought acted really well today, and I'll tell you what I did today. I bought the dip in Robinhood. And again, it's a test. When things kind of come down here, what I'm looking for is a move down into support. And I bought this, and I tweeted this out too. And I bought this right around, I think it was 94.80 that I bought this stock once it held the bottom of the value area. And I had a nice little trade for today. Right now, it did stall out here, and that's fine. I took a profit. I took a couple profit targets because, again, with this market, even though I like this name, I have to understand the overall market dynamics, which are weak right now. We're in a distribution phase with weak seasonality and a move below the 20-day moving average. So again, stocks are guilty until proven innocent. So what do you do with things that are guilty? You sell them on pops. So I did that, and I'm holding about a third of the position, and we'll see what it does next week. And if it breaks this bottom of value area for the next week, I'm out. That's it, right? Oracle, right, which is a name that I keep coming back to. Why do I keep coming back to Oracle? Because names change personalities on a strong earnings report. Every time that this stock has gone down, excuse me, since earnings, right? It's been bought, and I've been one of those buyers. So what did I do today? I bought the dip again. If it breaks the 20-day moving average next week, I'm out. That's it, right? But this has worked for me 3 or 4 times in here, so I'm going to go to the well again. I would like to see it get back above 247.78. Remember, every setup isn't going to work, but I continue to go back to the strong names that dip. I did not do anything with this name, but I kind of wanted to. I've been dying to get into this APH. Strong earnings, a little bit of a dip. But again, I don't want to go after every name. Same thing with GEV, right? These are the names. And again, GEV is still up so much, right? I would really like to see this come into the top of the value area for the month, right around 616, but it doesn't have to, right? And you could see that the little dip that it had today got bought. Right, so that's the story. MP Materials is another name. I started a position in this one today, made a tiny bit of money in this one. But again, below the 5-period moving average, buyers come right back into this thing. So these are the things that, that's why every quarter I develop a strong earnings list. I think we've got about 70 names on there. And what I'm looking for in those 70 names is for shallow dips, for dips into like a 20-day moving average, and then they get bought really quickly. So again, don't want to put on every trade right now, but I think some of these opportunities are pretty good ones for now. So that's it. I'll leave it there, except for just the performance for the week. Last thing I'd like to do towards the end of this week, towards the end of any week, I like to review the performance. Here's what we have. Again, this week was very challenging with all the events this week, and give yourself a pat on the back for getting through this week. To me, these are always one of the hardest weeks to get through. Not only the last week of the month, which I view as difficult trading, just because of that usual last week of the month, I view as most of the time it's weak, but also because it was the busiest week of earnings this week. You had a Fed meeting, you had a jobs report, and you had a whole bunch of other headlines regarding tariffs and everything else. So these are not easy weeks to get through. They're very whippy. For the week, SPY finished down 2.4%. Small caps underperformed, down 4.2%. Qs were pretty much in line with SPY, down 2.2%. International markets got beaten up. Remember, when you're long things like EEM and EFA and FXI, you are short the dollar, because that's how the mechanics. They hold a basket of local securities, and the ETF is denominated in dollars. So you're essentially short the dollar. So the dollar goes up, right? You're gonna lose in that situation, and that's why also these names did very well in the first half of the year, because the dollar was weak. TLT was at 1.6%. Gold put in a positive week, uh, up 0.6 of a percentage point. The dollar up 1.4%, although down 1% today. Bitcoin also in that risk off category, down 3.2%. What performed well this week? Your interest rate sensitive areas of the market, utilities, home builders. I thought the semis did very well for this week, down 1.2%. Aerospace, also one of your strongest areas of the market this year, only down 1.3%. Communications, which Meta is a part of that, was down 1.3%. Staples only down 1.6. You go to some of the weaker areas, higher beta areas of the market. Clean energy, uranium went down a lot this week, down 8.6%. Crypto stocks down over 7%, almost 8%. Steel, oil services, which had a big week last week, gave a lot of that back, down 6.8%. Metals and mining also weak. I just wanted to walk through. Maybe I'll do this one chart, and then we'll call it a week. And again, I'll be reviewing all this in the weekend video for members. I also have to send out a P&L report for members. I'll do that this weekend. I finished up for the month about roughly 7% for the month. So, and most of the gains that I made for in July were in the first half of the month. Much more better trading opportunities. Too whippy for me this week. So chart. Let's look at semis first. Been one of the strongest areas of the market. Again, broke the 20-day moving average. Watch that bottom of value area next week. That level's 282.07. I think, sorry, the font is really small on my screen right now. NVIDIA, every dip has gotten bought recently. The last time that this dipped and filled this gap here, it got bought right up. So I'll be watching NVIDIA next week as well. That's a great stock to watch for next week. AMD reports next week, but AMD fulfilled that bullish 80% rule, and I think got rejected right into resistance. So of course I'll be interested in AMD next week, but it's made a big run and is capped by that resistance there at 177.50. Have a great weekend, everybody, and see you on Monday, unless you're a Tribeca Trade Group member.